Hi everyone, this is Aki with another tax video going over 5 tax mistakes that are costing you money for if you're being disorganized. If you're missing documents and receipts, guess what? You're also leaving some money on the table because either your refund is going to be reduced or your tax liability is higher. So number one thing that you have a control of is if you're not keeping copy of your prior tax return, that it's impacting your tax bottom line. Why you need your prior taxes? If you're filing using a tax software on 1040, many times different tax software will ask you for your adjusted gross income, and that's taken from your prior year tax return. Now, some people think, oh, it's just my wages. So I remember, what my wages were. And it might be the case, but for many people, you see all these adjustments are being done to your income. Like there's other maybe taxable interest, maybe you had some dividends or whatever. And so that's calculated. The adjusted gross income is not necessarily your wages only. So if you keep inputting the incorrect adjusted gross income into tax software and it keeps getting rejected, at some point the tax software, the IRS database is saying, okay, this is suspicious activity. Guess what? You will have to file by paper, which is a hassle. If that happens, don't worry about it. Just make sure you keep a copy for next year. But another reason why you want to keep a copy of your prior year tax return is also because you want to reference it and you want to see maybe there's some credits or deduction that you're getting from year to year, and you want to make sure that you're not forgetting something. So this just really helps you trigger your memory to realize that, wait a minute, I had some credits last year. Why am I not getting it this year? So it's like a good reference, and that's really helpful. Number two is filing tax returns with missing documents. So if you're missing W-2 or 1099-Rs, 1099-Bs, and so on, any kind of 1099 forms, maybe you had a job for 2 weeks and you forgot that you even had that job. If you're not going to include it on your return, guess what? IRS is getting copy of all the forms that you're getting copy of, and they will know that something is missing, and you might get a letter with either examination or they're asking for more documents, or they're evaluating or making an adjustment to your bottom line. And sometimes people are rushing through their tax process and they're thinking, oh, I just want to file it right now because I know I have refund coming, but you're missing a broker statement, and maybe you had some capital gains, dividends, or there was some selling going on that some people don't even realize. Sometimes taxpayers have a relationship with the brokers, and for whatever the way they have it set up is that the broker can make some selling of certain mutual funds or stocks at some points if it reaches certain levels, and they didn't realize that they had a sell of their stocks during the year and they had some capital gains. So if something is missing, then basically IRS will make that adjustment, and you might have a surprise that's not a positive, not a good surprise, that you thought a refund was coming, but then you actually have to give some money back, and no one likes that. And then you might have penalties and interest on not paying everything on your tax returns if you have tax liability, let's say. So so it's very important. Now, let's say if you do have documents missing and you know that something is missing, but you can't find it. So you can get a record, you can get a transcript. So if you go to IRS, and I'll put it in the show notes, basically you can request it online, you can get the transcript. So if you have tried to get a W-2, let's say, from your prior employer, and they're not being responsive, maybe they went under, what have you, you can try to get it from the IRS. And there's an easy process. There's also a get transcript by mail if you want to just do that. So I'll include this link so you are able to obtain that information. Number three is not keeping receipts that support credits and deductions. So if you have a child and after school, that you enroll them in after school program because you can't pick them up on time, or they were in daycare and what have you, then you can get some credits for that. And if you don't have that information filled out from the provider of these services, then you're leaving a lot of money on the table and you're not going to get these credits and deductions. And so you have to try to obtain that information as soon as you can for the year. So when the year ends, just make sure you go back and you try to get that information. Another, maybe deduction, maybe you contributed to an IRA, but you don't remember what it is, and you're guessing, or you're saying, oh, I don't know, it wasn't much, but it was maybe $1,000 that you can be deduct from your taxes. So, it's very important to have that information. Fourth one is not retaining historical cost basis information on investment. What does that mean? It means how much you paid for your investment. So let's say if you have stocks that you bought at $100, let's say, and then you're selling it now, but it was a long time ago that you bought it, and now you're selling it for $200. If you don't have the cost basis information, if you can't find the paperwork, then you're just saying, oh, tax me on the entire $200 per share, which is a lot of money that you're going to pay taxes on, versus if you can subtract the cost basis, how much you paid for the investment, then you can subtract it from what you're getting, so you're only paying taxes on the $100. So sometimes on stocks you can't find that information, so I'll show you a way that you can get some historical information, and I like the Yahoo Finance actually for historical information the best. I'll put the link for you as well. And basically you're just searching for your stock, and then you can click on historical data, and once you have that, you can also get it monthly, and you can specify how many years. You can do 5 years or max or what have you, and then apply. And then you can have historical information, and if you have an idea when you bought it, maybe a year at least, then you can use this as a averaging method of finding the cost of your stocks. And so this is a good reference. It's not 100%, especially if there's some stocks that went through splits and so on, but it gives you an idea of what it was if you had zero historical information. Now you bought a property. If you buy a property, you should keep these documents until you actually sell it, because the same thing, maybe you have an investment property and you made some improvements, changes, so these are costs that you can subtract from your proceeds. So if you sold it for so much more now than what you bought it originally, but you made some improvements, you have to have the documents, because if you keep guessing, guess what? If the IRS asks you to support your calculations, and if you don't have it, then you will lose with the agency. So it's very important to have that and keep it until you sold your property, or the stocks or mutual funds and so on, investments. Now the last one is not including power of attorney. If you're filing documents for deceased, let's say, that's very important, because you have to have it in order to file the tax return for someone else. And on the IRS website, they have some information what you need. You can pull the power of attorney form and fill it out, and actually you can send it to the IRS, and there's different ways. You can submit it online, you can just mail it or fax it, so it's very important to have that. And they also have this IRS assistant that you can answer some question to tell you. It will tell you how to file the tax return for a deceased person, so that could be helpful. So if you don't include that form, what will happen? Either the processing can be delayed, the refund can be delayed. Now there's also other processes that you have to, and steps you have to do if in case there is a refund on a deceased form. There's a form 1310 that you have to fill out in order to claim a refund due on a deceased taxpayer return. But it's just costing you money basically if you're not including that information. Now, so these are the 5 things that we went over, the 5 tax mistakes that you're doing for being disorganized. So what is the solution? There's a simple solution, and wait for this. Yay! So basically, what it is just have a big envelope, have a folder, a binder, what have you, and whenever you're receiving documents throughout the year, you just you put it in that one envelope or the binder or folder, and just label it with the tax year and just put it in, so whenever you're filing it's ready for you. So whenever you're filing and you don't have time to organize yourself, I mean, the beginning of the year it's always so hectic, so you can just pick that up and you have all the documents there. You can also use the computer and scan some stuff. You also get, you can obtain copy of many documents online nowadays. Now, if you're filing yourself, you want to make sure you keep a copy of your tax return from prior years. So as soon as you're filing, there's usually an option of downloading a copy. You want to make sure you download a copy, because especially if you're going to change your software, you're going to be trying to remember your login information from prior year and you might not remember. Also, if you're filing with paid tax preparers, many of these companies now allow you to have access online to your tax returns, so you have quick access. If you should change it in any point, you have access to that, so it's very important. So it's a simple solution. Thanks so much for watching, and I hope you just take that one simple step and keep yourself organized, because that will save you money.